All right, let's do the end of the week review here for the week of March 7th. The week of March 9th here. Okay, so on the weekly candle, we had another down week, very bearish. Taking out the relative equal lows here, taking out this low, and failing to come to this weekly low here. Just shy of that, and price, returned back right above the TGIF range by the end of the week. So TGIF, by the way, is just the 20-30% range of this weekly candle. What do we have here? So after taking out the relative equal highs, it's not shocking to see price starting to run lower. And after a couple bearish expansive candles and the general market sentiment still being very weak because of Trump, not shocking to see that price continue for a third consecutive down week. And I mean that's pretty much all that there is to say. If price can continue, depending on how we interact with this low, maybe these relative equal lows here and over here are going to be in target. Just want to see how price materializes. On the daily, starting from Monday here, we had a new week opening gap that brought us into the constant encroachment of this daily FEG SIBI. We closed in the lower half of it, still not really having a body outside of it, and then ran lower, creating a nice daily bearish order block. It's gonna be tough for price to run back through, but in hindsight, I was looking at this daily FEG busy and how we were interacting with it, and you could see Tuesday, Wednesday, we closed in the upper half of it and even started to show signs of rejecting higher. Because of this daily bearish order block, it was still 50-50. Price, because think about it, like, even if price rejects higher, like where's it gonna go, right? It could take out this high, but that really is gonna start kicking off a market maker buy model to run higher and take out these civvies. But if price is still truly weak, it shouldn't really make it past this daily bearish order block main threshold, and stay in the lower half of it, which it did basically. And then price, you know, on the fourth day of interacting with this BISI, ended up running lower, which is a Thursday, which expanded massively, closing well below this wick, and then continued that move going into Friday, but failing to take out this major low over here, which is these relative equal lows here. Now on the 4 minute, on the 4 hour rather, Monday we had a short-term high form, and then on the constant coach on the daily SIBI, you can see price. Most of the bodies were hovering in the lower half of it. Then it ran lower. We found some short-term resistance at this 4 hour BISI here, running higher. It's come back and tapped this daily bearish 4 hour bearish order block. Then it ran lower and took out this relative equal lows. That was by Monday PM. So you can see Monday was a pretty active day, and typically Mondays of NFP are going to be very active. And then overnight, some consolidation going into London. We manipulated lower, taking out this low, but then created a low of day, going into the AM session and ran higher, created a 4 hour bullish order block, and then consolidated inside this daily BISI. So it's basically showing us that we're not ready to leave this daily FEG yet. That's where we're closing on the daily candles, which you saw. Then price consolidated overnight again. Pre-market, we have another run lower. And then an AM, continue that run, tap this bearish 4 hour order block, rejection block right here on this wick. And then ran higher, created another 4 hour bullish order block. And this is why I was starting to think that price could run higher. But then hindsight, thinking about it, that daily, bearish order block is going to take precedent. Price consolidates over this 4 hour BISI, or daily BISI overnight. And then going to the London session on Thursday, massive expansion lower. AM session has a retracement back into that 4 hour CIVI, and then takes out the previous day low here, and takes out another low there in the PM session before running higher. Then consolidates basically all night, going to Friday. One more expansion lower, failing to take out this low, comes back up, and then closes around the TGIF range on Friday. So you can see after basically trending downwards, Friday session didn't really have a lot of displacement in any particular direction, which is pretty characteristic of what happened pretty much after the Monday move until NFP. This is not shocking to see this kind of price action the week of NFP. It's going to be difficult to read price. You could be, it could be very fickle. You can lose a lot of money. So you got to be careful. And I think that's one of the things that I should probably take away from this week. I mean, days prior to major news coming out, like they're not going to be the most fun or exciting price action. And it might be kind of the time to maybe pull back on my live accounts and only wait for optimal trading conditions. There's the rest of the 3 weeks for the month. And I think that's a major takeaway for me. Just to be way more careful about price action. And I'm really, really glad I learned that this week. On the 1 hour, we make the high of the week here at 9 a.m. on Monday. Then we have a 22 model formation, high, low, high break of market structure lower, fair value gap that gets left open because we are in the lower half of this new week opening gap and also tapping the lower half of the daily civvy. So that keeps that open, as well as this breaker over here on the left. Price runs lower, after consolidating during lunch. In the PM session, we continue that downwards move. Okay, and take out these relative equal lows. One of the best setups of the entire week, if not the best cleanest price action of the entire week. Fortunately, I missed that. Unfortunately, I did. It is what it is. Then we consolidate basically from overnight all the way until pre-market, or we have a run lower, taking out this previous low. And then we have a inversion of this 1 hour civvy coming back after the Monday, the Tuesday AM session, going into PM. We take out this relatively equal highs, return back to an old 1 hour IFEG, which price fails to run through, and then runs lower back into this 1 hour BISI to end the day, consolidates. And then London session, we have a purge of these relative equal highs above here, creates a bearish order block in the opposite direction, but does not come out take out these relative equal lows here, right? So we stop at this 1 hour bullish order block here, on this Wednesday at 11 a.m. and then reverse going into lunch session against the daily range so far, and then make a new high of day here at 2 p.m. And then the last 2 hours of trading was pretty choppy. Then we consolidated overnight, at midnight, and then ran lower, going into London, inverting this 1 hour BISI here, pretty aggressively here by 9 a.m. Okay. One thing here is you can see that once we made it to the lower half of this 1 hour BISI, we consolidated there. The body is clearly showing a willingness to stay in the lower half. That is a sign that price is going to continue to run lower. Price runs higher one more time in the opening range and takes out this relatively equal highs, and then creates another bearish order block going to the 11 a.m. hour, and then creates another low here in lunch, and then eventually takes out the relative equal lows that we failed to take out yesterday, Wednesday, by Thursday 2 p.m. And then we have a retracement in the last couple of hours. They're consolidating mostly overnight. NFP, this is going to be very, very common to see before like an NFP news comes out. Price spikes and takes out these relative equal highs, comes back into this old 1 hour bullish order, bearish order block after filling out this 1 hour civvy, runs lower. This candle tries to run higher one more time, but can't make it past this new day opening gap. Instead, we close lower, and then price tapped it one more time to create a bearish order block. Creates a low of day here at 11 a.m. Then 12 o'clock hour, we start the retracement, comes back into the range, and then closes inside the TGIF pretty much, or around it, just above it, around this new day opening gap. I think one of the things that we're learning here is that on choppy weeks, especially like look at how much we've moved since last week, right? We're in a deep discount after largely moving. Yes, the market is weak, but it's going to need some time to accumulate orders, purge liquidity, and then run lower. So, that's how you see a lot of these moves, after making the low, it'll come back in the PM. Because yes, we're consistently making lower lows, but in this kind of range, when we're such deep in a discount, it's not I guess shocking to anticipate price to have a lot of like indecisiveness about whether it wants to continue in the PM. Also, a week before NFP comes out, like the days before the NFP comes out, like this is characteristic, right? Up and down, bouncing between PDRAs. What I call the PDRA bounce effect. We're bouncing back and up and down from premium to discount because we don't have any real sense of market direction. But the market was so weak that we still ended up kind of trending lower prior to NFP, and then had one more pass lower, but it came back into the range, especially on a Friday because it's the TGI. We're going to close back there. So it wasn't really until it was only really Monday that had really good price action. The rest of the week was pretty trash until after maybe NFP, where we had a nice downward move and a nice return higher. So I think one of the lessons is that a couple of days before NFP, really shouldn't be trying to risk too much. Maybe taking 1 or 2 trades a day max. And if you take losses, just jot them down, think about why, and just wait for better price action. But hopefully this has been helpful. I'll see you guys in the next video.